Hello.
Yes, ma'am.
Happy evening to all our members. On behalf of SIRC of ICAI, I welcome you all to today's meeting on labor code laws. So auditors may need to consider labor and social security code compliance as a part of their audit procedures. So they may need to assess the adequacy of the internal control related to payroll processing, employee benefits, and auditor who are aware of these codes can identify and report any potential violations or areas of risk that could affect the financial statements of a company. So non-compliance of these codes can lead to financial penalties and legal liabilities. So overall, knowing the labor and social security codes is essential for auditors to perform their duties completely, competently, ethically, and responsibly. So we have with us an eminent speaker on this subject, CA Soundararajan sir, to brief us about the labor code, social security code, including wage code and social security code. So before handing over the session to our speaker, I would like to introduce him briefly because he's more than his profile is much bigger than his experience, because he's much more experienced person in this field. So I would like to take this opportunity to briefly introduce him. Soundararajan sir is a chartered accountant with experience in audit and assurance functions, including statutory audits, Indian income tax audits, and consultancy services. He also served as an associate director, senior manager, assistant manager, and executive audit executive, and he proficiently handled audit engagement for entities in manufacturing, IT sector, financial services, apparel manufacturing company, real estate, leasing company, and service industries. And he involved in a public company accounting oversight board inspection team for inspection of NASDAQ listed company for financial year 18 and 19. And his core competencies are accounting standards, financial statement reporting, auditing standards, prudential norms issued by RBI, statutory audit, limited reviews and tax audits, Securities and Exchange Board of India, so and internal control and SOX reporting. He has industry exposure and hands-on experience in statutory, Indian income tax, and group audits that includes as an audit manager or automotive sector, that is regarding audit of original equipment manufacturer, financial services, NBFC, captive financing, automotive component suppliers, audit of suppliers of OEM. He has handled inspections of public company accounting oversight board, internal office peer review. He has he handled trainings of IFRS, Ind AS, accounting, auditing standards of interns and executives, Indian income tax audit training at office levels, training on Indian income tax, accounting standards, and internal control over financial reporting at internal audit team group level, PCAOB auditing standards, training at office level and engagement team level. So he has undergone the training sessions on IFRS, Indian income tax audit, and Indian wage code 2019 fraud risk assessment conducted by Institute of Internal Auditors. He accelerated the award received during December 2013 for excellence in audit of engagements during the quarter. Kudos received during December 2014 for excellence in an audit engagement during the quarter. So with this very brief introduction, I handing over the session to our speaker, CA Soundararajan sir. So over to you, sir.
Yeah. Hi all. Good evening. Am I audible, Geeta?
Yes, sir. You're very much audible.
So, good evening to all. I firstly wanted to thank SARC for giving me this opportunity to handle a session on the labor code. And reason for selecting this topic, I just thought it's an appropriate time for us to revisit this labor code, which came sometime in 2019 and 2020. And obviously, considering the general elections, which is going to come in the next year, this government, there are a lot of possibilities that it might get rolled out during the current and during the next financial year, that is 23-24. The labor code should get rolled out, is what is the understanding which I have. So I just thought it is appropriate now to revisit whatever has happened earlier, because earlier everybody had a lot of discussions on this code, and now it has settled down, and we need to revisit at this point of time. And as rightly said by Geeta, it's that labor law are the important aspects of every organizations, because every organization, even though either it be a manufacturing or a service sector, the important asset of the organization is going to be the employees who are handling it in a proficient manner and in an well-versed manner, because the experience of the employees are much important for an organization to drive further and then take it forward. That's how I view it. Even though the world today talks about AI, chat, GPT, and a lot of things on the machine learning, still the brain of the human being is much more important than what the technology can do. Technology has its own limitations rather than the human beings. And obviously, even though a lot of technologies have developed in multiple decades, still the employment or the employees are not gone about, and still the highest number of taxpayers that happen to be the employees. So with that brief note, I'll just get into this session. I'm just sharing my screen. If somebody can confirm me if it is visible, it will be easy for me to take it forward. Is my screen visible?
Yes, it's visible.
Yes, sir.
Okay. So today I'm going to touch upon only two codes, which is about wage code and social security code, because these two are very big, and these two has a lot of financial implications apart from the industrial relations code and OHS. But I'm not touching upon that, because considering the time frame within 2 hours, we can only deal with these two codes. If we take all four codes, I don't think we'll be able to cover it within a span of 2 hours. So, and any questions at any point of time, if somebody wants to ask any clarification, you can stop me or put it in the chat box or in the Q&A session. We'll handle it appropriately. So with this, we'll get into this session. And before presenting, I just wanted to have a disclaimer being presented, saying that whatever I'm going to present today are the views of my own views. It's the views of the presenter, and nothing is of the views of either the council of the ICA or the board of the ICA or of the views of the ICA. So don't take it as a view of ICA, or don't take it as a concrete view. It's my own interpretation, my own personal view is what I'm going to present it in today's session. Because there are a lot of clarifications, a lot of interpretation which are required when it comes to a law. And rules are still awaited. A lot of multiple interpretations are being taken by the people. And I stand by the view, whatever I am taking right now, and I'm presenting that to the participants. So just to give a brief background, today we have multiple labor laws. It varies around 30 labor laws, around 100 rules, and we deal with state-wise minimum wages. We deal with a lot of labor-related provisions, a lot of forms, and multiple implications are there. And central government has actually consolidated all this into 4 codes. That's how this entire approach of transforming the labor law into labor code has taken place. And it's a bigger law, it's a bigger code which has been implemented, which is in the process of getting implemented. So earlier we had around some 44 central laws and 100 state-specific labor laws, and there has been a lot of old information which are available in the public forum, and it's been for decades we have been following those laws, and we had a lot of interpretations, a lot of cases, a lot of judicial pronouncements, and a lot of notifications, clarifications. So we have been asked to follow multiple stuff, and any ERP to support that or any consultant to support that would require a lot of reading, and ease of doing business was not a part of that, because there are multiple laws, and anybody who is opening up an organization or who is opening up an establishment is required to follow multiple interpretations, and they're required to get multiple registrations, multiple informations. So to ease out all this, I think the consolidation has happened and 4 codes have come into place. That's how this view is all about. But if you look at my personal view, because that's how the government has projected this, but if you look at my personal view, there are a lot of acts which are there, there are a lot of definitions which are there today, but labor code has consolidated all this. But if you ask me in spirit, is that a true consolidation? What has happened? In my view, it's not a true consolidation what has happened, because each code has actually have a subdivision and chapter of the existing law. If you go and read the code what has been published, it will show you a subdivision saying that, for example, in wage code, it will say payment of bonus, it will talk about payment of wages, it will talk about minimum wages, it will talk about inspection. So it is all like step by step of today's law has been replicated into the code is what I look at it. And they have tried to actually rationalize the definition, and they have formed multiple definitions into it. But if you look at it, there are some places there are difference of definitions. For example, factory has been defined differently in different codes, but wages have been defined uniformly in across all the 4 codes. And interesting point to note is that there are references to the old law is still available in the labor code. For example, they have cross-referred to Factories Act 1948, they have cross-referred to Industrial Employment Act 1946, EPF of 1952, Gratuity Act of 1972. So if we carefully read the code, it looks like they've consolidated and they've gone into a different effort altogether. I'm not actually going against that point. Central government has taken a lot of effort to consolidate. But in my view, there are a lot of interpretation which is possible. There are a lot of litigation which is possible because of this code. So with that note, I just wanted to get into this because the government, what they're projecting, it looks like it's going to be ease of business. But in my personal view, it's going to be like unlearning whatever you have done. It's going to be relearning what you're going to do. And it's going to be a new set of efforts which everybody has to put into place and take it forward with different interpretations, different definitions. And then at a given point of time, migration from an existing law to a new law, and then making people to understand what it is all about is going to be a different level of efforts, like how a Companies Act migration has happened from 1956 to 2013. But that was more of a play which chartered accountant and company secretaries were to do. But labor code, unlike that, it is every consultants of HR, chartered accountants, company secretaries, and the HRs of the organizations have to play a lot of role. So it requires much more effort than the Companies Act 2013 is what my personal view. Why I'm saying so, you will understand in this slide, because the new code has about 480 sections. It has about 331 rules. It has 18 schedules, and it has 222 definitions, and it has 61 forms. So everybody has to understand this section in detail, definitions in detail, rules in detail. Then only the procedure becomes easy for all of us. And then filing the form will be a new set of efforts for all of us. And it would require a detailed training to all the HR. It would require a detailed explanation to all the employees in the organization, because employees need to understand how their salary structure will be once the new labor code is going to come into place. The secretaries have to understand, the company secretaries have to understand what will be the requirements of a law in the organization, what will be the responsibilities of the officers in default, who are all will be held responsible for the compliance as well this. So the opportunities for the people is very high, either as a consultant or as a chartered accountant or people within the organization. But at the same time, the complexity is also high, the interpretation is also high, considering the voluminous code with which we are dealing, because we are consolidating around 30 acts and multiple state acts into 4 codes will have its own complications. So if you look at Code of Wages, it has around 69 sections and 26 definitions of 58 rules. Each of it has its own challenges. Each of it is a detailed interpretation which is required when it comes to implementation stage. So I would urge everybody to go through these code in detail again and then refresh the memory, because it would require a lot of efforts to implement it. And state-wise draft rules have come. State-wise, people have given a lot of around 31 states and union territories, including union territories, have prescribed code of rules for wages. Around 25 states and union territories have prescribed rules for social securities. Around 26 states have prescribed rules for OHS, and around 21 states have prescribed for IR code. So that's how the code rules have been prescribed by the states. So coming back to the slide again, you need to look at the central code, you need to look at the state rules. You need to look at the forms and schedules, and you need to have a lot of stress on the definitions. And apart from this, every organization have to revisit their salary structure. Every organization have to revisit their job profile. Every organization have to revisit their ERP, how it is performing. Why an organization is required to revisit a job profile, I'll explain in some point of time during the course of the discussion. And why an organization is required to revisit the salary structure also, I'll explain, because there is a change in the definition of wage, and there is a change in the definition of the minimum wage. That's why you need to revisit the job profile as such, the skill set as such. And ERP should play a major role, because an organization like Infosys, an organization like Wipro, or an organization like Reliance or Tata, it's not an easier job to do it manually. Today's ERP will support them on the rules and regulations of their own establishments in multiple places today. But again, when they go into a new rule, they need to revisit their ERP functionalities and the compliances, the internal control framework. All would require to be revisited, and then taken a lot of efforts, and training has to be given. That's the underlying which I want to drive. So if we look at it, labor code on wages have come into effect in case of statutory of minimum wages, and then they have taken into consideration a lot of implications when it comes to wages under the labor code of wages. And when it comes to social security, they have addressed close to about 9 acts which has been consolidated, and then they have formed social security code. Wage code, they have consolidated 4 acts. Industrial relations, they have consolidated about 9 acts, and in case of labor code and in case of OHS, they have consolidated about 13 acts. So that's how the consolidations have happened, and then people have started working on it. And if you have to time travel on the wage code per se, wage code bill was first approved by the Union Cabinet and was introduced in Lok Sabha sometime in 2017. And then it was given in 2018-19 to the standing committee. And due to this change of parties and other things, this got lapsed. And thereafter, it was approved in Lok Sabha in sometime in 2019, and the President assent was received in August 2019. But still, it has not come into effect because there is official notification which is awaited, and rules are awaited from different states. That's why it's still not yet gone live. But I'm pretty sure that at some point of time, in few months or in few quarters, it will go live, and rules will come into place, and then the interpretation will happen at that level, and notifications will take place definitely, and everybody will move on to this new code. So once this code comes into picture, everybody has to understand what is the revision which is going to happen in the salary structure, what is going to happen in case of definition of establishment, what is going to be the threshold which is going to redefine, what is the role of the administrative, what is the role of the authorities, and what will be the geographical extension which is going to happen because of this new wage code is what I'm going to discuss in next 1-2 hours. So with that, we'll see. So this is a newspaper clipping which I got when I read through this entire wage code is all about. So one of the thing what they're telling is pay component changes will be different across the different range of salary structure, and the impact will be different. For example, an high salaried employee might not have an impact on the structure. It might have an impact on the gratuity and superannuation because of the structural change. They may not have an impact on the take home salary. And same with case of mid salaries. But in case of low range, it is supposed to have an impact on the take home. It is supposed to have an impact on the social security and other things, which we will discuss in detail during the course of this entire discussion is all about. But before getting into the code per se, I just wanted to discuss on few of the challenges or intricacies of today's law, how it will look like when you implement the labor code. What is labor code when it comes to employees is what first question which comes to my mind. So when it comes to an employee, normally an employee will look at the salary structure, will look at the take home salary, will look at the social security or the retirement benefits. Now under the new code, the salary structure is going to get revisited, because today different states have structured the salary into different parameters. For example, some states are telling the basic should be 60% or it should be 30%. And every organization have their own structure. Somebody will say grade, that is the highest grade can have basic of 30%, the lower grade can have basic of 60%, HRA will be 50% of the basic. So everybody have their own salary structure today. Now going forward, government has prescribed the limit with which the salary structure should happen. So today the government is telling the wage should be 50% of the total salary. The wage should be 50% of the total salary is what is being defined. So what is the implication of this? Let's understand that as in the first place, because that will be the effect for the employee. Wage code has defined what is wage. Wage includes basic salary, DA, and retention allowance. These three are included as part of the definition of the wages under the wage code. So wage code today tells out of your total salary, 50% should be your wage. That's the definition which is being given under the wage code. So unlike today, going forward, my basic plus DA plus retention allowance will be 50% of my total salary. That's how it is going to be in the future. Which, because of this, what is the implication to the employee? The implication to the employee is that once his basic goes up, his PF, there is an opportunity that his PF might go up. Today, there is no clarity on that, because today the PF is applied on basic or 15,000. As per the Supreme Court judgment, every employer applies PF on a limit of 15,000 and then deduct from the employee 1,800 rupees and then deposit to the government. Going forward, whether the government is going to retain that 15,000 limit or it is going to change as per the change in the wage definition is not clear as of today. Assuming if they change it, the take-home salary is going to reduce because PF is going to be higher, but the retirement benefit is going to be higher. So again, I'm reiterating, today, basic as a percentage of the total salary, any organization can have a different slab limit. But going forward, every organization will have a uniform slab limit saying that basic, DA, and retention allowance should be 50% of the total salary. Assuming it is below 50%, the definition says the balance will be considered as wage for the purpose of the social security and for the purpose of the payment of wages. That's how it is being defined today. So going forward, because of the change in the basic, the PF might get changed. The gratuity will get changed, obviously. Once the basic goes up, a DA goes up, the gratuity will go up. The cost to the employer is going to increase. But the retirement benefit to the employee is obviously going to increase. That's how it is being structured. The take home might become lower today, but retirement benefit is going to be higher. This will be the perspective of the employee, but when it comes to MSME or when it comes to the social security, it is not addressed properly. We need to wait for the rules to play around and then tell us how it will look like and how it will impact the payroll processing. As I said, today, the salary which is being fed in an ERP has to be re-looked into it. The salary structure has to be revisited. The processing has to be revisited. The ERP has to be revisited. So that will be the impact when it comes to processing. Again, the number of people who are going to get covered under PF might undergo a change, unlike today. The number of people who are going to get covered under ESI might undergo a change because of the change in the definition, because of which the processing of the payroll might have a challenge, and the gratuity will have a huge impact, because of which the fund contribution might undergo a change, or the insurance, whatever we are going to take for funding the gratuity, might undergo a change. These are all the challenges when it comes to payroll processing. So per se, from today's methodology of salary processing, people have to revisit how it will look like. Why it will change, I'll tell you, apart from the salary structure. Apart from the salary structure, wage code is also prescribing something called as a 4-day working week, which is about 48 hours a person has to work in a week, which means a person can work 12 hours a day, by virtue of which he will work 4 days in a week, and then remaining 3 days he might take as an leave for that week, which is a paid holiday for that week. That might also become an option which is available under the new code. An employee can select how many hours he want to work and then how many days he want to work, because of which the attendance might undergo a change, because of which the overtime might undergo a change, because of which his working days might undergo a change. The salary people have to look into from that perspective, saying that if a person has punched his attendance only for 4 days, that doesn't mean that he's absent for 1 or 2 days. Assuming if an office works for a 5-day in a week, if a person works for 4 days into 12 hours, it will be considered he has worked for the entire week. Assuming a factory works for 6 days a week at 8 hours a week, 8 hours per day, assuming if an employee works for 12 hours into 4 days, still it will be considered as he has worked for the 6 days. So all this punching and then all this hours will undergo a change. And overtime is also undergoing a change because the cap limit of overtime is being increased to 150 hours under the new code. And for overtime today, there is a fixed cap limit saying that you need to pay twice the basic amount. That's the limit which has been fixed today. But under the new code, it says minimum of 2 times it should be paid. That's all it says. The maximum limit has not been defined. Unlike today, there is a maximum limit which is being defined. Under the new code, the maximum limit is not defined. So if you look at it from an overall perspective, the salary structure is undergoing a change, saying that today an employer can decide how much a basic should be. An employer can decide how much a special allowance should be. An employer can decide how many working days it can be. Going forward, everybody will have a uniform structure of wage. An employee can select whether he wants to work for 4 days or 5 days. Overtime is fixed and overtime amount can be more than twice, because of which the processing of payroll will have an impact. That's what I wanted to drive from this slide. And companies should plan for first time registration, migration of data and compliances. That's a bigger challenge because today, unlike GST, when we had multiple excise registrations, multiple VAT registration, so we had one excise registration, multiple VAT registrations. We moved to multiple GST registrations. Today, we have multiple registrations for PF, multiple registrations for ESI, multiple Factories Act, and other things. We will move to a consolidated registration. So like GST, we will have to revisit how the registration will look like, how the migration of data will look like, and how the compliances will look like. There will be a lot of migration challenges which will be there to the employers under this new code implementation, which needs to be kept in mind when it comes to an implementation stage. And when it comes to the next challenge, what I foresee is with respect to the unions. Today, many organizations, many manufacturing setups have labor unions and they have labor unions agreements. And today it says an organization should have a trade union if the threshold of the worker is 100 minimum. Under the new labor code, the threshold is changed to 10, which means in any organization, if they have more than 10 workers, they are required to have a trade union, which means the number of trade unions, the organization which will have number of trade unions might increase. But this is not a compulsion. Even today, trade union is not compulsory. But if the organization wanted to have, the limit has been changed. And the requirement is also increased, which means everybody should enter into an agreement and they have to revisit how the agreement will look like. And the new labor code clearly says the labor union agreement should include issues relating to how they will handle the disciplinary issues, how they will handle termination of employees, how they will handle training and skill development, how they will handle about productivity. So there are a lot of scope for revisiting the labor union agreement. And the new labor code clearly says employer must consult with the trade union before making changes to the existing labor union agreement, which means employer should mandatorily engage with the trade union and then have to revisit how it will look like, and then they have to revisit the labor union agreement. So if any organization who has a labor union agreement have to play a role, have to understand what will be the implications under the new labor code and what changes would be required, because some labor agreement they would have been entered for a 3-year period or a 5-year period. How the transition will be impacted has to be considered. How the impact of the new rules, how the impact of the new terms and conditions will be there has to be considered. And if the organization or the establishment is going to have a new trade union because of the reduction in the number of worker limit, then the compliances will go up, then the impact in the payroll processing will go up. So all this as a practical challenge which needs to be factored at the time of implementation of the new labor code. Now the next challenge is with respect to the standing order. Today, there are a lot of organizations who have standing order, and people can go and opt for a standing order if they have more than 100 workers, which has been increased to more than 300 workers under the new code. The only challenge under the new code is they have prescribed a standard format of set of content what should be there under the standing order, which will cover how many working hours an employee should work or the worker should work, what will be the leave entitlement, what will be the disciplinary procedures, how the grievances would be addressed. Everything will be updated under the prescribed format. And here again, they are saying the standing order should be consulted with the trade union before getting implemented, and it needs to be revisited once in 5 years. So if an organization today has a standing order, has to revisit the standing order, bring it into a new format of the standing order, consult with the trade union, and then they have to revisit every 5 years the standing order, how it will look like. For example, today a standing order might say PF is exempted for trainees for a period of 3 years. Tomorrow, when we revisit how it will look like, we need to look at once the rules comes into picture. Whether at all an exemption would be given for a trainee, there is no clarity. Whether at all today's exemption under standing order will continue, there is no clarity. So people have to look at this format, people have to look at the content, people have to look at the rules and then revisit the standing order. So just to recap, we have challenges on the salary structure, we have challenges on the payroll processing, we have challenges on the trade union agreement, we have challenges on the standing order so far. Now the next challenge or the next practical difficulty would be on the existing disputes. So as every transition, the existing disputes will be dealt as per the old law. The new law will not come into place. There will not be any retrospective implications. But only thing, if the new law is favorable to the employee, whether at all authority will take that position is not clear. If the old law is not favorable to the employer and if the new law is favorable, whether at all they will take the new law into consideration is something which is not clear, because government is projecting saying that labor code is for the welfare of the employees. If that being the mantra with which they want to drive, and if the existing case has a favorable position under the new code, will at all the authority follow the new code? There is no clarity today. So the next point which we need to take into consideration is with respect to any grant or scheme what government has in place today, like PMRPY or any other scheme. So now what happens is, if there is any scheme which is running under the old law, it will still continue under the old law with respect to grant what is being sanctioned till now. And if it is approved under the old law and people have to file or claim, it will still be governed under the old law. But if it is approved under the old law and people have not complied due to time gap, they will not be eligible under the new law. They cannot go back to old law as well, which means they have to have the approval. They have to comply with the conditions under the old law and then go to the old law, or else the old law benefit will not continue. They have to follow the new law. So people have to look at what are all the benefits they are enjoying under the existing law, what will be the benefit under the new law, how they can enjoy, or what will be the cost impact because of this to the organization is something which people have to revisit. The next point is with respect to the existing judgments. There are a lot of judgments which are there from Supreme Court's right until the PF judgments which has come now, and there are a lot of labor disputes which are handled. So the point is, if the Supreme Court judgment is a binding precedent, it will still continue to apply. But if it is not directly relevant to the provision of new law and it does not have any issue with respect to the interpretation, then the new law will override. This is my personal view. If at all the Supreme Court judgments has a direct relation to the new law, or there are some interpretation impact which is there, will still follow the Supreme Court judgment if there are direct binding which is available. Otherwise, if the new law, new regulation is very clear, we'll continue to follow the new regulation and then we will not follow the Supreme Court judgment. But if you look at it from a layman understanding, the existing law will get replaced, the existing law will get discarded, the existing judgment will not hold good. If at all there is a binding, or if at all there are judgments which is having an interpretation related to the new definition, then we will have to still follow and then take that interpretation. But I still urge everybody to see what are all the judgments which has implication for you under the new code, which are following. Go to your legal counsel, take a legal opinion, and then see which one to be followed, which one is favorable to your employee or to your organization, rather than directly taking a call saying that I will follow full new code or I will follow Supreme Court judgment. It would be better to consult with the legal consultants, legal counsel, and then take a view. So, and one more impact is with respect to the international organizations who are coming to India. There are a lot of MNCs who are coming to India. There are a lot of expatriates who are coming to India. For example, today expatriates can apply for a PF exemption if there is a social security arrangement between both the countries. What will happen to that? There is no clarity as of today. And the salary structure, will they have to follow a new code salary structure? Unlike they will follow home and host salary today. They will follow some home portion of the salary which they will get it in their home country, and then host which they will get it here. Will that have an impact as something which we will have to see and then take a legal opinion? So if at all there are companies who are having expatriates on their role, please do take a legal view as to what should be done for the social security, what should be done for the gratuity, what should be done for the salary structure. Why I'm calling out social security and gratuity in specific, because whether at all today's agreement between, that is agreement between both the countries, social security agreement between both the countries will still hold good. There is no clarity. And gratuity today, as per the definition under the Gratuity Act, it will say an employee should be in service for a period of 5 years. But going forward, under the new wage code, they have drawn a reference called a fixed term employee, which means they are telling if an employee, if a person has been appointed on a fixed term basis rather than as an employee for a period of 1 year or for a period of 6 months or for a period of 2 years, they are still eligible for gratuity. So let's take an employee, let's take an example where a expatriate comes to India for a period of 3 years service. There will be still an agreement between the home, that is the holding company, the Indian company, and the expatriate. Will that take a color of a fixed term contract? Which means, will that person have to claim a graduate? Will that person have to be paid gratuity in India? There is no clarity as of today. So there are still open-ended interpretations which are available. In my view, if we go by the strict interpretation of fixed term contract, yes, gratuity will still need to have to be paid to the expatriates as well, like a fixed term contract, because they are telling the fixed term employee will enjoy the benefit in line with the on-roll employee on a proportionate basis for the number of days they are working or for the number of hours they are working. So if we extrapolate or bring the same analogy to the expatriates, I am still having a personal view saying that expatriates will also get the same benefits. But I'm not clear how the social security arrangement will look like and how the existing approval, assuming there is an approval which we have got, which is expiring after the implementation of new code, what will happen? There is no clarity on that. We will have to wait for those clarities and then see, because of this, whether the cost to the company will impact, whether there will be any taxation impact. We need to analyze in detail and take a legal counsel view. So far, I have touched upon the challenges with respect to salary structure, with respect to the ERP, with respect to the payroll processing, with respect to the trade unions, with respect to the standing orders, with respect to the international employees, with respect to any grant, and with respect to the old disputes. These are all the challenges which will be there. Definitely, these are all the challenges which are going to be there. So now let's understand the salary structure with an example. Let's understand how the salary structure will look like with an example from today's existing law and how it will look like under the wage code. So assuming if the total salary of a person is 30,000 and his basic salary is 12,000, allowances are 3,000, bonus is 3,000, HRA is 3,000, traveling allowance is 3,000, and special allowance is 6,000. Today, under the current Minimum Wages Act, this minimum wages will take into consideration only 3 components, which is basic, special allowance, and HRA, which means his minimum wages today will be 21,000. Under Payment of Wages Act, it will be again the same definition, which is 21,000. Under the Bonus Act, it will take into consideration basic DA and cash allowance, which will become 27,000. Technically, it will become 27,000 for a person under this Payment of Bonus Act today. Let's take EPF. EPF will take into consideration basic including special allowance, DA, retaining, and other allowance, which means it will become 24,000 today. Under Payment of Gratuity Act, it will be last drawn basic plus DA, which will be 12,000. Under the maternity benefit, it will be basic plus cash allowance plus incentive bonus, which will be 27,000. Under ESIC, it will be 27,000. But under the new code, as I said, wage as a definition will take into consideration basic, dearness, and retaining allowance, which means 12,000 plus 6,000, which is around 18,000, will be your wage definition under the code. Under the new code, your wage will be 18,000. That's how it's been structured. Again, I'm reiterating. Today, if your total salary is 30,000, the code says your salary, your wage should be 50% of 30,000, which means your wage should be 15,000 minimum. If it is below 15,000, the definition will take balance as part of the wages, and then only the remaining will be allocated across the allowances. That's how it will be. So people have to revisit the salary structure to match the definition of the wages. So there are certain exclusions which are given when it comes to wage definition. So they have included basic DA and retaining allowances. They have excluded statutory bonus. They have excluded house accommodation. They have excluded PF contributions. They have excluded HRA, overtime, commission payable, everything. And let's look at this example now. Let's assume a person's total cost is 20,000. Its basic DA and retaining allowance is, let's assume a person's cost is 40,000. Its basic DA and retaining allowance is 20,000 in this given example. We have fulfilled the definition of wages. But there is one more catch under the wage code. What they are telling is for the purpose of the definition of wage, it will be 20,000. For the purpose of the payment of wage, they are including further more items. Some of the items which is excluded are getting added to the definition of wage when it comes to payment of wage. So if you look at my items, row number, statutory bonus, value of accommodation, contribution to PF, I have skipped point D and I have skipped point F, G, and H, which I have brought down. So it's not in a chronological order. I have put A, B, C, E, I, and then I have put D, F, G, and H. If you go to the law, if you go to the code, wage code, it will talk from A to I, but then I have rearranged it in such a way saying that basic DA retaining allowance, and then whatever I've highlighted in red, which is conveyance allowance, HRA, amount payable under award, settlement, or overtime. These elements would be considered as part of definition when it comes to payment of wages. So when you are looking at the definition of wage, the code is taking into consideration only three elements, which is basic DA and retaining allowance. When it comes to payment of wages, it takes into consideration conveyance allowance, HRA, amount payable under award or settlement, and overtime. Now, there will be a question. Assuming overtime is a variable element, why at all they are doing a percentage of 50% on the total salary structure, including OT? OT is a variable element, obviously. Last month, I would have got a different OT. Current month, I'll get a different OT, because of which my 50% might undergo a change. But if you look at a clear interpretation from a code perspective, there is a cap limit to OT hours. That's why they have brought OT as part of the fixed element itself, not as part of the variable element. So if your OT between last month to current month is undergoing a change, your wage 50% will undergo a change. Your contribution of PF or your contribution on the social security will undergo a change. So every organization who are paying OT, that is the manufacturing organization who are paying OT, has to be very careful every month whether their 50% of wage is meeting or not, depending on the OT amount what they're going to pay to the employee. So this is the important catch point, what I want to drive it here. And why D, F, G, and H carries a different interpretation when it comes to payment of wages, I'll touch upon in the next slide. So again, I'm reiterating with the example, assuming if your total salary is 40,000, your basic DA and RA should be minimum 20,000. If it is below 20,000, they will add the balance to wage definition. And when you look at payment of wages, it will also include conveyance allowance, HRA, amount payable on award or settlement, and OT. These are all the items which will be included for payment of wages. So there is one question: what is the amount paid to defray special expenses in wages? An example. Okay, so basically defray as an example is nothing but there are some special expenses what we give it to the employees for the purpose of relocation or for the purpose of other items as an organization. So there will be some special occasion for which we pay to the employees. So those will be the element which will be there. But majority of organization will not be having this as part of the structure. But some of the organization are having today as part of the structure. Next question, when you say the amount will be added back, will it create a loop and exponential effect of 50% criteria? Dinesh, so to answer your question, what it says is it will not have a circular reference per se to answer your question. So what will happen is, out of your total salary, what comes to a particular month, you will have to allocate what will be 50% on which you will have to calculate your PF or ESI. But your total payout will not undergo a change. But your basic DA and RA, the wage amount will undergo a change, because of which your contribution to Social Security will undergo a change. But you can define a rule in your ERP saying that please take this total amount and then calculate 50%. Whatever is the differential, you allocate it here. But when you look at your pay slip, it will not undergo a change. Your pay slip can have a differential amount. But for your wage definition, you need to structure in such a way saying that your Social Security is taken care of. That's all. You need not revisit your pay slip. You need not revisit your salary statement. That is your CTC, what you have signed between employer and employee. It will create some amount of confusion when you look at the salary structure per se when you contribute. But why they have defined this 50%, I'll tell you. Because today people are structuring the salary in such a way to minimize the gratuity payment, to minimize the PF payment. That's why the Supreme Court judgment came in 2019 to clarify what are all the components should be included as part of the PF contribution. So they said you need to include basic DA and also the special allowance if your basic plus DA is below 15,000. So assuming if today my basic plus DA comes to 12,000 and your special allowance is 6,000, they are telling please allocate 3,000 while contributing PF, which means today it's not creating a confusion, right? Today also you are allocating some portion of special allowance to the definition of wages when it comes to PF. The same way you will reallocate some portion to arrive at 50%. Today you are working out with a number, tomorrow you are going to work out with a percentage limit. That's all. If today there is no confusion of allocation from PF to basic salary, tomorrow also there will not be confusion from allocation to the remaining allowances to the basic DA and RA for the purpose of calculation of Social Security. So today, if a person's basic is 10,000, his DA is 2,000, his pay slip will still show his basic as 10,000, his DA as 2,000, his special allowance as 6,000. But when you look at PF, it will be 15,000 to 12%, which is 1,800 would have got deducted in pay slip. It will not be 12,000 to 12%. Going forward, also it will be the same way. Assuming if person's basic plus DA plus RA is less than 50%, you will allocate some portion there and then do the PF calculation. That's all. It's in line. It's more or less in line with what Supreme Court has done. There is no bigger confusion or a bigger challenge today. Hope I have answered your question, Dinesh. Yeah, next one is connecting to one unrelated point. On one hand, they are encouraging social saving. On the other hand, they are not incentivizing any deduction towards Social Security. So I just thought about this, but I'm not included in the slide. As you said, today under the budget 23, they are telling it will be a default new regime selection. There will now old regime is an option for the employees, for the assessees to select. And they are actually discouraging. If you look at it, it looks like they are discouraging the retirement benefits. They are discouraging the savings on the LIC. They are discouraging national pension scheme and all those. But if you look at from a mentality of an Indian or from a person who are working as an employee, normally we tend to save, irrespective of what government is telling or not. We tend to save that amount because today, for an example, ATC gives you a benefit of only 1.5 lakhs. There are people who are investing in ATC more than 1.5 lakhs also. So I don't think that will come down. There is some contradictory view between here and there, but here they are touching more from the perspective of an employee take-home salary. They are touching more from the perspective of his retirement life, unlike linking it to income tax. Income tax, they have brought it because to ease out non-submission, for ease out of submission of evidences, evaluation of proof, assessing officer to look at the proof. And there are a lot of people who are actually fudging the proof documents. There are a lot of people who are creating a HRA document, a rent slip, all those things. To avoid all this, they have brought out there. But here it is more to encourage a person's life after the retirement. That's the differential view which I have always when I read this disconnect. So the next question is with respect to the higher pension. Yes, today pension as an option is given. People can select the pension. And if higher pension is opted, yes, still it will be available for the employer to agree and then move on and then take it forward for the contribution for pension or PF. But only thing, when you have a salary structure including pension or the employer contribution of PF, only thing, the wage definition should not be forgiven. So you cannot allocate some amount to contribution to pension or PF and then bring the wage below 50%. That's very clear. And NPS contribution is now 10% on basic. Will that undergo a change on payment of wages as stand deductible? I think in new regime also. So as I said, there are a lot of clarification which are avoided how the PF will work like, how the NPS will work like. Today, I am presuming it will still hold good on the old regime. That is the way in which we are computing today. But we will have to wait how the government will take it forward, how the rules and how the operational guidances is going to come. As I said, even PF might undergo a change, ESI might undergo a change. Today's limit of 21,000 might undergo a change. Today's limit of bonus 21,000 might undergo a change. Today's limit of 15,000 for PF might undergo a change. Today's limit of gratuity of 20 lakh cap limit might undergo a change. There are a lot of possibilities. Even 15/26 calculation of gratuity might undergo a change. There are a lot of possibilities, but we'll have to wait and see how the government is going to refer it across and how it is going to take it forward. So any estimated time, as I said, whatever I have heard and whatever the information which are flowing, it looks like before the next general election, it should get implemented, which is before March 24, we should have this implemented. And the effective date might be different. It might be even after March 24, but they will roll out, and they have pushed all the state governments also to close the rules. And they are also framing the digital era. Considering this government is working more on the digital era, they are also, like MCA portal, they are also creating portals for the laborers. Today, there is a portal which is already available. For example, if I'm an auditor, there's a portal available for me to say, just feed in the information of the organization, which entity, which nature of industry it's working, what number of employees it is available, which state it is operating, which city it is operating, or which town it is operating. It is actually throwing which are all the law applicable for that organization, which are all labor law applicable for that organization, which I should take care. Same way, these people are working on a digital era to make this all possible. Like how a faceless assessment is happening, how a MCA portal is working, these people are also working on this, and it should happen in some point of time. That's my view on this. So the next point is on the remuneration in kind. So they have actually defined saying that an organization can pay, that is an establishment can pay to an employee a remuneration in kind. Only thing, if the remuneration is in kind is below 15% of the total wages only, it will be included as part of the total wages. I think their intention was clear to include remuneration in kind, but the way they have drafted looks little faulty for me, because they're telling if your remuneration is kind is below 15% of total wages only, they will be included. Otherwise, it will not be included. Because, for example, if a person is getting a car allowance, if a person is getting a canteen subsidy, if a person is getting a differential allowances on kind, like a furniture allowance or something, it becomes a little difficult for you to quantify in the first place. Second place, if it exceeds above 15%, there is no logic in excluding that from the definition of wages. I think there is some clarification which is required on this definition per se, because there is high challenges in quantifying how much will be the canteen subsidy, how much will be the free transport subsidy. Because today your income tax has some definition or some way of calculating when it comes to a employer owning a car or employee owning a car and the expenses are incurred. What will be the amount which will be added based on the CC limit, 900 per month, 1,800 per month, driver salary. There is some clarification which is there under the Income Tax Act, but there is no interpretation today available, because today people are structuring the salary saying that this will be the car allowance, this will be your canteen allowance to the factory employee, and all those are structured by the HR themselves. But we will have to wait how it will look like. And if it is above 15,000, whether at all it will get exempted from the definition of wage, there is no clarity. In my view, they have had an intention, but while drafting the English, it is not drafted correctly. It's a faulty English which should be revisited. Because of this, there might be challenges in ease of doing business. The portal, what I'm referring, Dinesh, I'll share that. I forgot the name, but I have that. Just give me a minute. I'll just look at it. I'll just show you what is the this one which I'm looking for. Yeah, it's eShram. This is the one which we are, which I'm referring to. It's the eShram which we will have to go through. It will give you all the information, whatever I've said. So is my slide again visible? Hope it's visible. Can somebody clarify? Just tell me, is my slide visible now? Yep. Okay, fine. So the other intricacies is with respect to whether a travel allowance which is getting reimbursed, will it be included as part of conveyance allowance? There is no clarity. Today, we don't include reimbursement as part of the conveyance allowance. Tomorrow, there is no clarity today. And they have also expanded the definition of establishment. They have included industry. They have included a place where any industry, trade, business, manufacture, or occupation is carried out, including government establishment, which means the term occupation is very big, which will include even a domestic occupation like an household. For example, a bigger person like Ambani has an household employees of more than 5 in numbers. Even that might be considered as an establishment. They might have to follow all the wage code. They might have to give wage slip before processing the wages. There is something which has been expanded altogether as a definition, but we'll have to look at how the rule will define this. And one more clarity which is given under the code, which is a welcome clarity, is that contracting out under the code is not acceptable. For example, can employer enter into an agreement with an employee to forego some of the benefits under the wage code? Is not permissible. So any contract or an agreement with an employee for relinquishing or removing or reducing the right of any amount or bonus or any information under the wage code is null and void. You cannot have any agreement to reduce the benefit what is given under the wage code. It is null and void. It is most welcome move which they have done it. The next important point is with respect to deductions. Today, when you're processing the salary, we do a lot of deductions like loan deduction, we deduct fines, we deduct penalties. And the earlier, the cap limit, they said you can do up to 75% of the total salary. Now they have said you cannot do it maximum beyond 50%. If there is maximum, if there is any amount of deduction beyond 50% of your total wages, again, they have coined the word called as wages. They have not referred to total salary, which means more than 50% of basic DA and retaining allowance. If your deduction is going to cross more than 50% of basic DA and retaining allowance, you cannot deduct in that month. You will have to deduct it subsequently only. And if it is part of F&F, you will have to forego, you cannot deduct it. So again, I'm reiterating, assuming if you have given a loan to an employee, assuming 1 lakh rupee, his basic DA and retaining allowance comes to 20,000. You cannot deduct more than 10,000. And if it is part of F&F, you cannot deduct anything more than 10,000 balance, you will have to forego. Because you cannot touch that recovery as part of gratuity. Because gratuity act today is very clear. You cannot touch any retirement benefit for adjustment of the deductions. Same holds good under the new code also. You cannot deduct any retirement benefit or any other allowance for the purpose of deduction. You can only touch basic DA and retaining allowance up to the limit of 50% of basic DA and retaining allowance. That's all. You cannot deduct anything more than that. Now the interpretation, now the challenge here is, are they referring to 50% of the earned wage or are they referring to 50% of the salary structure wage? In my view, it is 50% of the salary structure wage, it is not earned wage. Assuming if a person has not worked in a particular month, but he has other allowances, you can still deduct it up to the extent of 50% of the CTC wages. So that's how the interpretation which I am taking. And as I said, over time, earlier there is a fixed cap limit of 2 times the normal wage. Today they're telling it should not be less than 2 times the normal rate of wages. So an employer can pay more than 2 times the normal wage, or the state can notify that the OT should be paid more than twice the normal wage. That is still possible. We'll have to wait and see how the notification is going to come. Even here, there is a challenge on the payroll processing. Because state-wise, if the rule is going to be different, then the state-wise ERP has to be structured. So earlier minimum wages was applicable only to scheduled employee. Today it applies to all the employee. But we will have to wait and see what is the challenges which is going to come. I'll touch upon minimum wages and floor wages in subsequent slide, because there I have some clarity. Okay. So minimum wages, they have gone and defined how we will have to look at it under Schedule E of the Wage Code. They have actually classified the skill set of the employees into 4 categories: unskilled, semi-skilled, skilled, and highly skilled. So in my earlier slide, I said I will draw reference to skill set here. So what they are telling is, when you are defining a minimum wage, you will have to consider a skill set. That's why I said an HR of an organization today has to revisit the job profile. So they have to say, for this job profile, what is the skill set which is required? For example, there is a PhD in an organization. A PhD need not be highly skilled or skilled if he's going to do an admin job. Or a PhD can be falling under skilled category rather than high skilled category if he's going to be at a level of executive rather than as a part of the senior management. So there are different interpretation which is going to come, and they are going to classify unskilled, semi-skilled, skilled, and highly skilled. So to avoid any litigation in the future, I would urge every employer and every organization to have a definition of job description to say what is the skill set required. For example, if there is an accounts head, you'll have to clearly say what is his job description, how many years of qualified CA you are looking at. So assuming if you're looking at a qualified CA of 4 years experience, he will be skilled. If you're looking at a qualified CA of 10 years or 12 years, he can be highly skilled. Or a person who has triplet, assuming CA, CS, and CWA, need not be always highly skilled if his job profile is very small, basis which its salary might undergo a change. So there is 4 categories which they have defined as unskilled, semi-skilled, skilled, and highly skilled. This is one category they have given when it comes to minimum wages. And they also classified the entire India into 3 buckets, which is metropolitan area, non-metropolitan area, and rural area based on the population. So you'll have to look at the recent population statistics. If the recent population statistics of that region, or if that particular regime is going to be more than 40 lakhs, then it comes under metropolitan. If it is between 10 to 40 lakhs, it comes under non-metropolitan. If it is going to be below 10 lakhs or equal to 10 lakhs, it is going to be rural area. So anything greater than or equal to 40 lakhs is non-metropolitan. Above 40 lakhs is metropolitan. Less than or equal to 10 lakhs is going to be rural area. So which means you will have 12 categories of minimum wages. So 3 into 4, 3 unskilled, 3 semi-skilled, 3 skilled, and 3 highly skilled minimum wages is going to get notified. So today, how the minimum wages is looking like? Today, you have a sector-wise minimum wages and state-wise minimum wages, which is notified on a periodical basis, yearly once or yearly twice. Now, what happens is they have defined a new term called floor wage, which means central government will define what will be the minimum wages which has to be paid based on the skill set. And state government can define a minimum wage, but it cannot be lower than the floor wage. So let's break this into pieces. Okay, on the date of migration, how it will be, post migration, how it will be. So on the date of migration, today you have a lot of state defined minimum wages. Central government will define what is called as floor wages. They have said, if today's state payment is more than the floor wage, you continue with today's state defined. Or if the floor wage is going to be more than the today's state wage, you follow floor wage. So whichever is higher. On the date of migration, whatever you are paying today versus what they are going to notify, whichever is higher, you will have to follow. Going forward, again, it is going to be the same logic. Floor wage or the state wage, whichever is higher, you will have to follow. So you will have to obviously consider the floor wage and the state wage. Next set of important identification is, when you look at wage, there is a breakup. They will define what is called as basic wages. They will call as daily allowance. They will call as retaining allowance. And under the code, they have clearly said daily allowance they will revisit once in 6 months, which means April and October they will revisit daily allowance. So which means every employer has to keep a tab once in 6 months how the floor wage is going to get revisited, how the split is, how the state is defining, and what will be the number which is payable to the person who are falling under minimum wages category. Now let's look at the definition of one more definition which I want to run through is employee. So today, minimum wages are payable to the worker category. Going forward, they have defined what is called as worker and what is called as employee. They are telling worker includes all employee and excludes only 3 category, which means people who are in managerial capacity, people who are in administrative capacity, or supervisors whose wage is more than 15,000. So these people are excluded from worker category and rest all will be considered as worker category, which means you have a work supervisor whose wage is less than 15,000, he will become a worker. You have a person whom you have not designated as managerial or admin capacity or administrative capacity, he will still be falling under a worker category. And when this will be limit which is under the wage code. When you move to industrial relation and OHS code, they have defined supervisor is 18,000 salary. That's all. Which means worker excludes all your directors, all your officers in default, all your KMPs, all your administrative people like your company secretaries, and supervisors whose wage is above 15,000. So they have again defined the term called wage. They have not defined total salary, which means basic plus DA plus special retaining allowance. If it is more than 15,000 only, you will become employee. If those 3 is less than 15,000, then you will become worker. So you will have to look at how the minimum wages is going to get defined, how the floor wage is going to get defined, how it will going to get revisited, and what will be the implication of wages to the employees. That's how it is going to be defined. And when it comes to payment of wages, as I said earlier, you will include basic DA retaining allowance, and you will also include all other 4 elements, what I said as overtime, your settlement, award or settlement, and all those 4 elements you will include when it comes to definition of payment of wages. Now let's understand what are all the proposed amendments under the payment of wages. They are telling payment of wages has to happen only through electronic mode. So no more cash payments is allowed. Today, some of the organizations like manufacturing setup are paying their weekly salary, paying their weekly wages, fortnightly wages in cash, which is below 10,000. Keeping in mind the income tax limit of 40A3, they are paying 6,000, 8,000 in cash. Going forward, they cannot do. They will have to pay only through the bank account. Now there is a challenge there. Today, there is a challenge saying that some of the employees, they are not able to remit UAN, they are not able to remit PF because they are not able to link their UAN number with the bank account number. Going forward, taking this particular amendment into consideration, every employee will have bank account number, every worker will have bank account number. So it is easy to get a UAN, link the Aadhaar, and then pay the amount. So PF also will not become any delayed payment because of non-availability of UAN. They are addressing this issue. Second one, what they are trying to address through this is they are trying to address no more cash payments is allowed. Third point is they have also helped all the migrant worker to have one bank account, and they have helped the migrant workers to have one national ration card. That is all the common distribution channel where they can get rice, oil and a subsidized price. They can have one national ration card, which means a person working in Delhi tomorrow, if he comes to Tamil Nadu provisional store, that is distribution store, has to give him that. So they're easing out this process for the national migrant, and they're also easing out the payment process. And fixation of wages, as I said, it will be based on the daily or weekly or fortnightly. And time limit of payment of wages has also been very clear. You will have to pay in case of a daily at the end of the shift, in case of weekly on the last working day of the week, in case of fortnightly, second day after the fortnight. Assuming fortnight ends on 14th, you will have to pay on before 16th. In case of month, 7th of the subsequent month. So in case of daily, end of day. In case of weekly, before the week holiday. In case of fortnightly, 2 days from the fortnight. In case of monthly, 7 days from the month end. This is the limit. Today you follow 10 days, but you cannot do it. You will have to follow 7 days. Next important catch here is gradually there is no change. You will pay 30 days from the relieving date. But when it comes to F&F, today an employee takes his own time for processing F&F. And if an employee is dismissed or retrenched or terminated because of some of the reasons, they are now holding back the salary. Now under this new code, you cannot hold back the wage. You cannot hold back the wage. Again, I'm telling, you cannot hold back the payment of wages. You will have to pay. You can hold back only the other allowance component, You cannot hold back the whole salary like what you are doing today. Second one, if an employee is either dismissed or retrenched or he has resigned, you will have to pay the wages within 2 days, within 2 working days from the relieving date. 2 working days for payment of wages, not for other allowance, not for gratuity. So you'll have to be very clear. The catch is here only on the payment of wages, not on anything else, which means basic DA, retaining allowance, and all other 4 elements you'll have to pay within 2 days. You cannot put them on hold. So to summarize this 2 slide, what I'm telling is, when it comes to minimum of wages, you will have to first look at what is the job skill set which is required. You will have to define it. You will have to classify them as unskilled, semi-skilled, skilled, highly skilled. Populate the establishment into what is metropolitan, non-metropolitan, rural area. Follow the minimum wage. Look at every 6 months how the floor wage and the minimum wage is going to get redefined. Update your ERP, and then process it. Next set of thing you will have to take care is payment of wages only through the bank account. Payment with respect to daily shift, end of the shift, week before the week holiday, fortnight within 2 days from the end of the fortnight, month within 7 days. And when it comes to F&F, within 2 working days, you will have to pay the wages, not others. Gratuity within 30 days, you will have to pay. These are all the overall subset which we are doing. So as I said, deduction cannot be more than 50%, and permissible deductions are fine. Deduction due to absences, damages, recovery of advances, recovery of amenities, contribution to relief fund, income tax, PF, everything. So as I said, you can deduct only 50% of the wages. You cannot deduct anything more than that. And in case of F&F, you will have to forego. That's all. You have no other option. So employee we have discussed. So I'll just summarize the wage code. Wage code is actually consolidation of the 4 acts, and then there is a definition of wage which is given. There is a definition for deduction which is given. There is a definition for payment of wages which is given, and they have also described something called as floor wage, and they have also described what is called as employee. They have also described about what should be the deduction remuneration in kind. They have given a limit. They have also described about the payment model, payment timeline, and they have also described about how the this one should take place when it comes to classification of employees, minimum wages classification. So overall summary, wage code looks little simple, but when you get into practical implementation, it is going to be very complicated. It's not going to be easy. Now on the procedural part, under the wage code, the penalty is very high. They have defined the penalty in a very high way. The penalty is not going to be easy at all under the new wage code. I'm just going to that slide. Just 1 minute. So under the code of wages, so under the new code, they have actually graded the penalty. If you're doing a first time penalty for any instances with respect to non-maintenance of records, with respect to failure to pay the amount, assuming your PF, you will have to pay 20,000. You have paid only 10,000. Less payment has happened. Your first time instance is going to be 10,000 rupees. Your subsequent instances are going to be more than 10,000 rupees. If your payment of wages is less than the prescribed limit, the first instance is going to be 50,000 rupees. Second instance, it is going to be 1 lakh rupee, and it also includes imprisonment. So under the code, the penalties are very strict. The imprisonment are very strict. So let's be very clear. When you are non-compliant, when you are in contravention with the provisions or deduct anything which is in higher, your penalty is going to be 20,000 in the first instance. Next instance is 40,000 with an imprisonment, and you cannot go to settlement. Normally, you have an option called a condonation, but you can do a condonation only once in a period of 5 years, where you will get 50% waiver. And you can go for condonation only after a period of 5 years under the wage code or under the social security code. You cannot go within that period of time. And prosecution is also very high, and the implication on the penalty is very high under the code of wages. Now, when it comes to responsibilities under the code of wages, responsibilities with respect to payment of minimum wages, payment of overtime, payment within the timeline, adhering to the limits, and all those. Apart from this, you will have to maintain records and registers in an electronic format. You will have to issue payslip before payment of wages. You will have to have an ERP which will publish the payslip even before the payment of wages. And you will have to display the notices of the code of wages in all the locations, all your establishments. Even if it is a branch office, you will have to display. And payments due on death is also to be taken care, saying that in case of death, dues to be paid to the person nominated or deposited with the specified authority within 6 months or 3 months. So let's be very clear. Under the new code, the requirements of maintaining of records is very high. Penal consequences are very high. So that's the way in which the new code has been defined. Just a minute. So new code actually takes into consideration all these requirements, and then pay slip. Today, every organization has their own format. Tomorrow, pay slip will be defined under the code which every organization has to follow, which means under the new ARP, this also should be defined. This also should be actually designed for a pay slip. Question from Sabu: a company may have employees in different geographical area. How do you align this with the code? So as I said, if company is having an establishment at different area, so you will have to identify whether an establishment falls under metropolitan, non-metropolitan, rural. Basis the establishment, you will have to decide what will be the minimum wages. It is not employee wise, it is basis the establishment in which the basis the location in which your establishment is placed. Whether bonus is mandatory, yes, bonus is mandatory. Bonus still they have defined under the old act only, like 8.33% of your 21,000 limit, but the 21,000 is yet to be clarified. And they have also defined about the set on and set off principles. They have also defined about the minimum limit and then the carry forward of the amount as well. They have actually prescribed all this. Whether overtime is applicable to all employees for all 4 categories or restricted only to unskilled employees. Today, it looks like overtime is applicable to all the employees, all the workmen, all the employees, but we'll have to wait and see for a clarification whether overtime will be paid even to a person who is drawing a salary beyond a particular limit, or if there is a skill set difference. So we'll have to wait and see how the overtime will be defined. Today, it is for the workmen. Tomorrow, it might be even for a semi-skilled person or a skilled person. We'll have to wait and see how it will look like. Because today, there are a lot of judgments. Even if you go to abroad, like United States, there are people who are skilled. They have actually filed a case saying that they have worked for 1,000 hours of overtime and they've got sanction for overtime. So you'll have to wait and see how it will be defined when it comes to overtime. Today, my understanding is we will continue the existing model of overtime payment to the workmen. It will not be paid to anybody else. It will not be paid to managerial, administrative, or skilled employees. This is my interpretation so far. So just to summarize, as an organization, you will have to be ready when it comes to monthly variation components, which is going to affect your statutory. So if your total salary is going to vary, your 50% is going to vary. So you'll have to keep that in mind. You will have to include your valuation methodologies. You will have to keep in your mind how your accrual is going to work when it comes to gratuity, how your accrual is going to work when it comes to leave salary. You will have to take into consideration how your managerial employees, whether they are going to get covered under overtime, how your international employees are going to get covered. Will there be any litigation? All this has to be planned. All this has to be planned upfront. And you will also have to assess what will be your impact in the financial statement, what will be a hit to the P&L, what are all the exposures you will have to follow to manage the additional cost which is going to come because of the change in the basic, change in the limit, change in the PF limits and all those things, because your cost of the product might go up, your manufacturing cost might go up, your inventory cost might go up, you cannot increase your MRP, you cannot increase your customer pricing. There will be a lot of challenges which as an organization you will have to look into it. Then there might be requirement to revisit the current policies and process. There might be a requirement to revisit the technology, and there might be a requirement to look at how do you structure your salary so that employees get the benefit of taxation, because employees normally will not be willing to pay more tax. And you will have to look at how the wage definitions will have an impact on the retirement benefits. So as an organization, you will have to start working on these elements. immediately is my view. Next question is, what about leave deduction? Leave deduction today, it's like your LOP only. So if an employee is an LOP, it will be considered as leave unless and until there is. So an organization can have a leave policy and how much of leave carry forward is allowed. Only thing, today a leave policy payment will vary. For example, an organization can say this privilege leave, it will be paying on the overall salary. Casual leave, it will be paying on the basic. Sick leave, it will be paying on the overall salary. Again, when an organization is doing an actual valuation, today assumption will be given whether a person will avail the leave or it will encash the leave. When it comes to availment, it will be on CTC basis. When it comes to encashment, it will be on the component wise what is defined under the policy. So going forward also it will be the same way, but only thing, if your basic is going to undergo a change, if your overall salary structure is undergoing change, your leave amount will undergo a change. So if your gratuity in leave is going to undergo a change, how to treat that in accounts for the first time, I will deal it when I'm dealing the social security part of it. So Shanmugha Priya, the basic difference between wages and payment of wages is nothing but wages actually takes into consideration only basic DA and retaining allowance. Payment of wages also includes basic DA, retaining allowance, overtime, and there are other 3 elements. I put it in the slide. I'll just share this slide. So those 7 elements will be considered as part of the payment of wages. I'm just going to that slide. So when you look at wage, it is basic DA and RA. When you look at payment of wages, it will include basic DA, RA, conveyance allowance, HRA, amount payable under award or settlement, and overtime. These 7 components will be included. So with this, the payment of the wage code is over. So we'll get into the social security part of it. Social security, the overall newspaper print came like this. They are telling government seek to amend the framework for PF. It wants to include the ambit for everybody to include under social security, and they want to change the definition of wages. They also wanted to increase the number of people who are under EPF category and all those things. This is how the agenda came like under the newspaper clipping. And they introduced this bill in Lok Sabha on September 19, 2020, passed in Lok Sabha on 22nd September 2020, passed in Rajya Sabha in September 23rd, 2020, but we are awaiting for the official notification. So it actually replaces payment of gratuity, EPF, ESI, and Compensation Act, Maternity Benefit Act, and all those. So totally 9 acts it actually replaces, but the most frequently used acts are PF, ESI, gratuity, and the Compensation Act. And the headcount, what they have given with respect to applicability. So if an establishment has more than 20 employees, that is at least 20 or more employees, PF is applicable. 10 or more ESI is applicable, 10 or more gratuity is applicable, 10 or more maternity benefit is applicable, 20 or more employment information is applicable. This is given under the first schedule of the Social Security. So I'll come into this definition a little later. So as I said, let me first touch upon how the PF will look like, or how the ESI definition will look like. Assuming today an employee draws a basic salary of 14,000, his HRA is 6,000, conveyance allowance is 6,000, special allowance is 4,000. His PF contribution, that is PF salary, will be 24,000, which is basic, conveyance allowance, special allowance will be included, and if he contributes on 15,000, it is enough. And ESIC will be total 30,000. He will not be covered under ESIC under the existing law. Going forward, wage will become 18,000, which means it will only take into consideration basic and special allowance. It will become 18,000. So by virtue of which, if you hold good the today's monetary limits, an employee would get exempted under PF. Employee will fall under the mandatory ambit of ESI. So under the old law, he is contributing for 15,000 limit of PF. Under the new law also, he will contribute for 15,000 on a voluntary basis. Under the old law, he is exempted from ESI. Under the new law, he will become applicable under ESI. So this is the change which will happen when your existing monetary limits holds good. So to answer your question, Shanmugha Priya, this is the slide I'm covering. Social Security is on the wages, not on the payment of wages. It's on the wages. So gratuity, Today, they have coined a term called fixed term employment, as I said. And with respect to journalists, they have reduced the term from 5 years to 3 years, which means the cost will go up to those organizations. But the challenge as an employee, so today, if you have an employee, he'll become a full-time employee for you. He will stay for how many years you want. Today, an employer has an option to select an employee for a fixed term, which means if I have a project where I need one person for 6 months, I will only select that employee for 6 months and then come out of him. So there will not be continuous obligation for me. So employer will have a benefit for selecting an employee only for a particular period of time. Need not have for a continuous period of full year. There is no notice period concept. There is nothing. So every project wise, I can have new employees, new skill set, and then move on as an organization rather than depending on an existing employee. This will have a challenge on the skill set developments for the employees. If an employee has to remain in an organization, his skill set should be very higher, or else the employer will send him out and then select profile wise, that is project wise, new employees, and then move on. So now let's look at how the gratuity will look like. Gratuity is applicable on wages, and it will be, as I said, it will increase if your basic will go up. Moment it increase, there will be a one-time impact on the service cost. There will be one-time impact on the actual gain or loss. Even in case of leave, it will have an impact. Let's look at it, how it will impact and how do we account for it. So when your salary cost is going to go up only because of the restructuring, it is like change in the assumption of the growth rate. So normally when you look at gratuity, an organization, when they are going for actual valuation, they will give their existing employee count, they'll give their existing salary details, they'll give something called as an assumption of salary growth, assumption of people who will leave the organization, and discount rate. So because of the change in the salary structure, if your salary is going to go up, your salary growth rate is going to change. So this impact will have an impact on the actual gain or loss. If an organization is following accounting standard, it will have an impact in income statement. If an organization is following Ind AS, it will have an impact in OCI. If an organization is following US GAAP, in case of post-employment plan, initially in case it will go to OCI, and later on it will be written, it will be moved back to P&L. That's how it will look like. So fixed term employment, even if it is 2 years, it is assumed as fixed term employment. And with respect to journalists, the period is coming down from 5 years, it is coming down to 3 years, because of which the number of employees who will get covered under gratuity will go up. So because of which your past service cost is going to go up. It is not the growth rate or it is not the salary structure which is changing. It is the number of year itself which is changing, because of which past service cost will go up. So due to which the impact under accounting standard will be income statement, impact under Ind AS will be income statement, impact under US GAAP will be first OCI, then it will wind back to P&L. So technically under Ind AS, all your service cost will go to OCI, all your assumption change will, all your service cost will go to P&L, all your assumption change will go to OCI. This is how Ind AS has been defined. This is how Ind AS has been structured. So let's take an example and then look at how it will impact. So assuming today my total cost to the company is 12 lakh, broken into basic as 4,80,000, HRA 2,40,000, LTA 1 lakh, fuel reimbursement 1,20,000, PF statutory bonus as special allowance. For the purpose of gratuity, it will be basic plus DA, which means it is 4,80,000 divided by 12, which is 40,000 per month. If you take 7 years as the year of service, which this employee has completed, it will be 40,000 into 15 by 26 into 7. He will get 1,61,000 as today's gratuity amount. Going forward, what will happen? His minimum is basic and DA should be 50% of the total cost, which means his definition is total amount will become 5,68,000 for the purpose of gratuity. So technically, his gratuity will go up to 2 lakh rupees. So under the new code, the gratuity cost is going up. That's how it will look like. So let's take one more example. Today's salary is 12 lakh. His basic is 4,80,000. Under the new code, so under the existing law, if there is a 10% increase without change in the structure, his new salary will be 5,28,000. But under the new code, his new salary will be 6,60,000. So 6,60,000 will be broken into two components, 10% on account of increment and balance on account of the salary structure change. So how it will look like? So under the old law, the service cost will be 42,000. Under the new law, the service cost will become 50,000 because of the 10% increment. And because of the salary structure change, there will be an actual gain or loss. So your cost will go up, your closing obligation will go up, your funding will go up. So the summary here is an organization's gratuity cost is prone to go up, and they will have to actually take into consideration what will be the impact on the P&L, what will be the impact on the OCA if it is an Ind-AS organization. So let me now touch upon the differences. So the differences today, when it comes to registration is required under the PF Act. So technically, everybody has to register. Under the every act, there is a requirement of registration. Going forward, requirement is there only with respect to centralized registration, because it is one law pan India. You will have to register only once. They are now going to actually appoint, or they are going to create something called as National Social Security Board and State Unorganized Worker Board, which will be comprising of 42 members to take care of the employees' grievances. Earlier, you can appeal if the amount is about 75%. Today, if it exceeds 25% itself, we can go and appeal. So likewise, there are a lot of changes. But the important catch here is, under the social security definition, they are trying to cover everybody, even the unorganized sector. Like they're trying to cover gig workers, they are trying to cover platform workers, they're trying to cover household employees also. Which means what happens today is, today if an employee is working for Swiggy or Ola or Uber, he is not getting covered under social security. Going forward, he'll get covered under social security. And if an employee has its own is a platform worker, he has his own business. So he has to voluntarily go and register with his Aadhaar for PF, and the government will contribute the social security. How government will contribute? So my understanding is, today every organization is paying 2% of its profit last 3 years profit for CSR. My understanding is they are planning to carve out 1% for this purpose from the central government fund and then give it to the platform workers. So they are planning to include all the unorganized sector into the social security and then cover these people for the benefit of ESIC insurance, for the purpose of PF, for the purpose of gratuity, for the purpose of their retirement benefits. So which means everybody, even if they are not working in a private sector, they are not working in a public sector, everybody will get covered. Even a daily worker, daily wage employees are going to get covered under social security. This is the bigger ambit change as part of the social security which is going to happen. So ESIC, today what happens is, if a person is missing to get covered under insurance, or the employer has missed out, they cannot get the benefit, but going forward, he will get the benefit. So social security, in my view, is becoming very broad, and under the new code, it is not going to be very small, it is going to be very big. And government is also going to fund it, which means government is going to track everybody through Aadhaar, government is going to monitor everybody, government is going to have welfare scheme for unorganized sector at central level, state level, and they are going to contribute, which means they are going to be very particular on the contribution, they are going to be very particular on the timeline, they are going to be very particular on the audit. And when it comes to wage code, or when it comes to social security, today an inspection happens at the regional level. There is an inspection officer who comes from Tamil Nadu who reviews it. Going forward, it will be centralized, which means any state inspector can come and review, can come and do the inspection for Tamil Nadu, and Tamil Nadu officer can go and do inspection in Orissa. This is because they want to remove this influence what an organization is doing today, and they want to bring everything transparent. And what they have said is, if an inspection is happening, post the inspection, the report has to be uploaded in the public portal within 7 days, which means going forward, if your organization is subjected to inspection, you will have the observation report published, which means nobody can hide what is the observation which has happened. Every employee can see it, every auditor can see it, everybody will be able to see what are all the consequences, what are all the mistakes you have done. and there will be consequences accordingly. And the catch here is they are now coined the term called the inspector cum facilitator, which means they are not only going to penalize you, they are going to help you. They are going to give you an opportunity to correct all your mistakes, which means they will facilitate and help you to correct your mistakes. They are not going to penalize you very hard. In the first time, the penalty is going to be very limited, and going forward, it is going to be graded, and they will help you out. So, which means today, government is also looking at helping the organization for the first time, facilitating the organization, giving an opportunity for the organization to correct all their mistakes and then take it forward. And okay. The next one which I want to cover is with respect to pension scheme. Pension scheme to be framed for the purpose of superannuation, death pension, other things. The clarity is required today. It looks like pension scheme will still continue. It will not be stopped. We'll have to wait and see. And there are power to introduce schemes under EPF Act. Only 3 categories of scheme are approved, which is EPF, EPS, and EDLI. But going forward, government can introduce multiple schemes, and there will be differential rates which they can notify. It will not be 12%. They can even notify a differential percentage. And contravention of law, there are consequences. And today, as a assuming there is contract employees, today contract employees, as an employer, you have an obligation to ensure contractor is paying the PF correctly, contractor is paying the ESA correctly. Going forward, you have all the obligation to ensure contractor is fulfilling PF obligations, ESA obligation, minimum wages obligation, bonus obligation, payment in time, and everything. Which means you as an organization, whomsoever you are contracting, either through an agent or directly you are contracting a particular person, you will have to ensure they are complying with all the requirements of the wage code, all the requirements of the social code. It is your obligation. Otherwise, as a principal employer, you will have an obligation to contribute to the government. And when it comes to bonus, again, they have made a point very clear. It has to be paid within 8 months from the end of the accounting year, and it has to be paid only through the banking channel. It cannot be paid through any other channel. So when it comes to social security, the responsibility is with respect to timely payment, social security for unorganized worker, reporting of all your issues with respect to employees, maintenance of records on electronic basis, display of notices, filing of return in a timeline, payment of dues to all the surviving members, legal members, nominees. All this will be now becoming an obligation to be taken care. Here again, when it comes to social security, the penalty for failing to pay the contributions deducted for the first time will be 1 lakh, and then second, going forward, the amount is getting increased, and the imprisonment is also getting increased. First time you will be imprisoned between 1 to 3 years. Going forward, it will be imprisonment of 2 years and penalty of 2 lakhs. And non-maintenance of records, first time it will be 50,000 imprisonment up to 6 months. Going forward, it will be 3 lakh and imprisonment up to 5 years. So if you look at the difference between wage code and social security, wage code, first time there is no imprisonment, but in social security, first time itself there is imprisonment. So by this, what government is driving to say, they are giving a lot of importance on the social security because they are also contributing. As I said, government is going to monitor very, very clearly, very closely on the social security contributions. So everybody has to be very clear on the social security documentation, social security policies, social security compliances, social security timeline adherences, social security payments. So the general requirement would be, first step, every organization have to understand the code, redefine the policies, quantify the impact, communicate to all the stakeholders, review the third-party contracts, and then look at for balancing the income tax, and then look at for all the entitlements under the labor code. This should happen on an immediate basis. And also what they should do, they should look at what are all the final settlement which has to get closed. They should look at all the compliances. They should look at all the salary structure, possible impacts, and all those things going forward. So my overall summary when it comes to social security is that social security has been broadened. It is not only going to cover the employee, it is going to cover even the seasonal employees, gig workers, platform workers, household employees. Everybody are going to get covered, and liability is going to be higher. Onerous is on the employer to ensure contractor are also fulfilling. gratuity is going to become higher, because of which your actual gain or loss or your service cost is going to increase, leave is going to have an impact, and your P&L has to be planned, your product cost has to be planned, your MRP has to be planned, your profitability has to be planned, your budget has to be planned, and all your contributions has to be taken care. And you will have to be very clear when it comes to social security, because government is going to contribute, and the government is going to play a very clear role in ensuring that you are paying it correctly and you are not delaying it, and you are also taking care of all the documentation, all the compliances, and government will be very clear when they are going to do an inspection on this. And as I said, there will be onerous on the principal employer with respect to terms of employment. Terms of employment, whether it is express or implied, you will have an obligation. So for the purpose of counting going forward, don't count only your on-roll employee, please also count your off-roll employees. And you will have to ensure saying that they are taking care of all the compliances. Whether it is with respect to contract, whether it is with respect to legal representative, everything you take care. And then please adhere to all the norms what is given under the Code of Social Security. So I'll just overall summarize whatever I have said now. So overall, as I said, you have an challenges on the wage structure, you have challenges on the standing order, you have challenges on the existing trade union agreements, you have challenges on the existing litigations, you have challenges on the ERP, you have challenges on the employee take-home salary, you have challenges on the structuring, you have challenges on the payroll processing, and timeline for payment, and F&F settlement, definition of wages, payment of wages, all these need to be cleared. Social security is going to increase, cost is going to increase, compliance is going to increase, and ownership is going to increase. That's how it is going to be going forward. Is there any compliances for loading, unloading workers? Yes. Loading, as I said, everybody is going to get covered, even loading, unloading workers. As part of their organization, the logistics organization has to take care of these compliances of loading and unloading, or if it is part of contract, the contractor has to take care, and you will have, if you are a principal employer, you will have an obligation to ensure that it is getting remitted and there is no non-compliance to it. So that's the impact which is going to happen. And that's pretty much from my end. I'm open to any other question. For last 15 minutes, I've just planned for Q&A session. So now I'm open for any further questions, or anybody wants to unmute themselves and then ask me any further questions, we can take it up. There are some more questions. Could you share illustration on higher pension switch pros and cons? I have not worked out this. I'll just work out and send it as part of my slide, what I'm going to send it to the branch. I'll just work out this and then send you, as part of the higher pension, what will be the pros and cons. Any idea as per you when it can go live, to applicable to all? As I said, I'm looking at the code to go live before the next general election. So sometime in Q2, we can expect them, but the effective date might even become 1/4/24, but we'll have to see. Whether any person with whom organization has contract to supply tea or beverages will be considered as a worker. So it will be considered as a contract for us. It will be contract worker. So you will have to ensure saying that the contractor is fulfilling, but if your contract is not for the contract workers. So let's take an example where apparel organization actually asks for workmen to be supplied. So there's a workman supply contract. In that case, you will have a lot of implication. If it is only supply of service, then you don't have an implication. Assume in case of tea or beverages, if your billing between him and you is going to be number of tea into per unit, I don't see a challenge. If it is going to be number of man days the person is going to come to your organization, then you have a challenge. Any other question? We have 10 more minutes. So I'll just come back on this higher pension loan, which I'll note down. So people can then, as I said, as an organization, it's better to look at all the implications and also talk to the legal counsels and then take a firm view as to how it will be, and then look at what are all the challenges which will be there in the ERP and implementations, and more from an accounting and cash flow perspective, and more from a costing perspective and budget perspective. That's how I look at this entire code all about. If we have any consultants, part-timers, hope they are covered under the new. Yes. So as I said, fixed term employment are getting covered. Fixed term employment can be for an hour or can be for the term also. But only thing, if it is on a professional consultancy basis, it doesn't get covered. Assuming if you're appointing a lawyer or if you're appointing an audit firm, they are not getting covered. They are still under professional relationship. There will not be any employer-employee relationship. And CA officers claims article assistance are outside the purview of labor code. So I would still view article assistants are only getting paid the stipend, and there is no employer-employee relationship per se between them. It's only a training what is getting imparted to them, and I don't see it will be applicable. But only thing, if their total like Big Fours, if they are going to pay a higher amount of this one more than the institute prescribed limit as stipend, then it might take a color of salary, and what kind of implication it will have on PF and ESIs or the benefits has to be evaluated in detail. If it is going to be 1,000, 2,000 rupees, I don't see a challenge because they are only article assistants and trainees. What will be the treatment of corporate NPS? So as I said, today the NPS is at 10% limit. And going forward, the limit might change, or the NPS might not carry the current methodology. The methodology might undergo a change, but I still view NPS will still take the color of current model because it's for the retirement benefit, and government is spending a lot of focus on the retirement benefit So NPS will still continue. We can contribute on a voluntary basis, or you can select as part of your salary structure where you will also contribute, employer will also contribute. But only thing, under tax, you will not be able to get a benefit if you're selecting new regime. Can a company employ apprentice and get away with PF and gratuity? So that today it is getting covered under the Apprentices Act, and the apprentices are getting part of your standing instruction where they are getting covered for exemption. Going forward, Apprentices Act is also still not getting consolidated. That will be outside the limit. So we'll have to see how that act will have an impact. Still, how the standing order will get structured is most important. So any further questions? We are left with 5 more minutes. I'm happy to take it, or else I'll hand it over to Geeta for concluding. In case only the employer is contributing NPS, still it should be the basic of 50. Yeah, the wage definition cannot undergo a change. That's pretty much clear. The wage should be 50% of your total cost. That's clear. That is not getting compromised anywhere. I'll share the PPT with the branch. Can you please throw light on fixed term employee? Okay, so just to give a clarity, fixed term employee is nothing but you employ a particular person only for a period of 1 year under the contract or as a consultant. So what happens today, you act on a principal to principal basis, and then you are giving him with full responsibility, assuming a VP finance is appointed on a consultancy basis for a period of 2 years. So what happens today, you pay him as a professional charges, deduct TDS, you don't remit PF, you don't remit ESA, you don't give him gratuity, everything. Going forward, what they're telling is even for a fixed term employee, they are eligible for all the this one post-employment benefits like PF, gratuity, everything. They will be benefited even though their tenure is below 5 years, even though they are not on rolls. That's how it will be. Geeta, can we conclude this?
Yes, sir, we can wind up, sir.
Yeah. So then I just want to thank again the branch and the SIRC for giving me this opportunity, and also to all the participants for patiently listening through the session and then asking a lot of questions and interactive. And if there is any further query, people can actually mail it across to me or contact me. This is my mail ID and the WhatsApp number. This is my number. So people can contact me through this.
Sir, thank you, sir. Thank you for this session on behalf of SIRC of ICAI, sir.
Thank you. Thank you all, and thank you so much. Thank you. Thank you, everyone.